Well, the lucky buffalo shirt strikes again, which means a lot of you watching this owe me an apology. If you haven't seen it yet, the overall market had a phenomenal day. Dare I say it, it was blindingly green. We're talking bottom left to top right, ripping of an action. Obviously, I hope you got yours. In this video, I'll be breaking down exactly what happened, why I think that this bullishness will be continuing, and I also want to kind of give you a quick recap of something I touched on in the previous video, and really I'm referring to Tesla. And even though you guys gave me a lot of hate for it, it is very evidently squeezing in the short term, which means there's a lot of money to be made. So obviously I want to do a little bit of a breakdown on that, because I do also not see just the overall market, but also Tesla stock going higher and higher and higher. So with that being said, if you enjoy these type of market breakdowns, don't forget to like, subscribe, all that good jazz. With that being said, let's rock. By the time the world's largest casino officially closed on the day, here was the headline. Dow jumps nearly 600 points on Monday as investors hope Trump softens his tariff stance. And I wasn't joking when I said it was blindingly green. Look at the heat map on the S&P 500. It was very difficult to not make money, at least if you were on the bull side of things today. And it was all because of an update we got early this morning. White House narrows April 2nd tariffs. Tariffs on industrial sectors are no longer expected to be unveiled on that date, though major trading partners will still be hit with reciprocal tariffs. Now, I know that sounds boring. There's a lot of monetary, economic, trade war jargon in there, but clearly the market thought it was bullish, and it all comes back to, oh, okay, the administration is in fact softening their stance of what this trade war, tariff war is going to be. The White House is narrowing its approach to tariffs set to take effect on April 2nd. That's next week. Very important. Don't miss it. Likely omitting a set of industry-specific tariffs while applying reciprocal levies on a targeted set of nations that account for the bulk of foreign trade with the US. Once again, I get it, a lot of jargon, but what you need to know is the entire tariff situation from our administration, not as aggressive, and the market loved it. The SPY ripped, the Qs ripped, Tesla ripped, MSTR ripped, tons of green over here. In fact, the only red I'm really seeing is the fact that volatility is dying off. Once again, a very bullish sign. And this kind of leads me to what I've been pitching to you guys over the past couple weeks, over the past couple months. Wall Street sees signs that worst of the US stock sell-off is over. In the short term, I 100% agree. If you've been watching the show live Monday to Friday, 9 to 11, shameless plug, be there. You could see me degenerately trade. If you've been seeing the show or even these update videos, I've been telling you, wait, because the perfect opportunity to go long is somewhere between what we just had on last Friday, quadruple witching, the quarterly and monthly OPEX, and somewhere between these April 2nd tariffs. So starting on Friday, we're in this perfect dip buy zone. And the reason for that is I truly believe that the tariff situation is going to come in softer than we expect. Why I think that is because if you look at any of the tariff related drama in 2018, with Trump previously, it exactly went like this. Come in super hot and kind of be very verbose about what you're going to be saying. And then every so often, as we're getting closer and closer to the actual dates, have a person from the administration or a source familiar with the matter leak more positive news to one of the most popular press outlets. And that's exactly where the market bottomed and we started to rip. Folks, this is the same playbook that we already saw in 2018. So knowing that a lot of the put related delta burned off the table because of quadruple witching, and on top of that, we also have the extra benefit of just global tensions coming down with the ceasefire between Russia and Ukraine. Is that a done deal? Obviously not, but we are the closest to that being over than we've ever actually been. Those are three very, very big things that are taking uncertainty and straight up bearishness out of the system, which is why we are in this transitional point where I think if you're okay with the risk that you are currently seeing on whatever, your favorite industry, your favorite stock, man, oh man, I'm still sticking to my guns, obviously putting my money where my mouth is, that I believe April is going to be a very, very bullish month, especially relative to the recent craziness that we've been seeing. Of course, none of this is a guarantee because we don't truly truly know which way this tariff news is going to break. It's more of an educated guess, or you could think of it as the highest probability pathway, but not a guarantee. Because even today, when we were rip-roaring higher and higher and higher, there was a midday sell-off because of this. Trump says auto and pharma tariffs coming soon, but doesn't mention April 2nd. President earlier announced a 25% tariff on any country that purchases oil or gas from Venezuela. So we really didn't even go a full day of having nice things without it getting a little bit messed up. But once again, I think this is that classic game of come in very aggressive, set the bar there, and then kind of negotiate the other way. And as that stuff plays out, I think the market is going to continue to pump and pump and pump. This is what I've been pitching to all of you for weeks now. Bearish until the end of the month and then bullish at the start of April. And that's exactly how it's going. Very quick side point. I think this is absolutely hilarious. Trump economic advisor rejects short-term pain from tariff hikes. White House economist says U.S. consumers have options. Now, folks, I was born at night, but I wasn't born last night. I don't understand why the administration keeps pitching it like this, as if tariffs are in no way going to impact the economy and the stock market, and the only reason we're going down is for something not related to that. Come on. I admit that we should have better trade deals. I think we commonly, as the country of the US, get the short end of the stick in our trade relationships. But man, oh man, like at least just be honest about it. Be like, yeah, we get it. There's going to be short-term pain. Be honest about that, but also understand that this is going to lead to a better future. I think that's just more realistic and honest messaging rather than saying, hey, we're trying to fix it right now, but the way in which we're fixing it is causing no issues. With respect to the state of the economy, we are going to get more info this week. We're going to get the consumer confidence tomorrow, Tuesday. We're going to get durable goods on Wednesday, GDP and initial jobless claims on Thursday. And then on Friday, we're going to get the all-important PCE inflation report. So literally every single day of this week, we're going to get some sort of data drop that's going to tell us how strong the economy is or isn't. So make sure you mark these down, especially if you're trading around those times. And now, if you don't mind, I want to have a quick conversation. Just yesterday, I posted this video, Tesla short squeeze. Squeeze alert. Why I'm buying Tesla stock right now. And you guys dunked on me. Everyone was basically saying this is a horrible bullish trade or whatever, because you were basically saying you hate Elon Musk, and thus because you hate Elon Musk, you don't think the stock could go up, or any other generic reason. I'm not here to verbatim quote why you guys don't think it's going to go up, and you guys really dunked on me. And it got to the point that even my idea that the overall market was going to go up, you guys were even clowning on that. And honestly, I don't get why. I was there with the data, the information, and more important than all of that is I was freaking right here. Tesla, 275 calls. I got into it. It cost me a decent chunk, 18K. Happened to be up a cool 35 right now. Just a nice 190% return. And I guess what I need to share with you on this one is not a haha, I was right. It's more of the very important message of don't let your political biases get in the way of you making money. We see this every single election. People get so incredibly enraged and irate on one side, and they absolutely fawn and love the other side. And you're missing out on opportunities on both. You have to be able to see the market in a lucid manner without your political lens, because you're gonna miss out on things like this. So I get it. Yes. Am I going to get the last laugh here? Of course. I made $35,000. I just made in one trade that I pitched to all of you for free. I pitched this to you and I was able to make more than I used to make in an entire year. And I think it's just, you have to have that ability to see a good setup. It was low risk, it was high reward. We knew there were shorts in the system, and we knew the options market was turning bullish. Objectively, the clear trade there was to be bullish. And then yet that was somehow lost on not all the viewers, but a decent chunk. And if you don't believe me, if you're watching this, go back to the previous video and look at the comments. I left them up there because I knew that they were going to be eating their own words, but here it is. I put my money where my mouth was. I wasn't just saying it to say it. Right there, $35,000. And do I think it could go higher? Yes, I do. Because once again, coming back to the objective measures of risk, reward what we see in the options market and the fact that we know there's almost $17 billion betting against this company, I think there's a very real shot that Tesla's testing 275, which it hit today, big open interest level. The next one is up here at 300. Folks, I'm not talking about this from an investment standpoint. I'm talking about it from an active trade. And of course it has to be an active trade because it's an options play. This expires in mid-April. So I just want to keep you apprised of this situation. And since we're here talking about the option levels, with respect to the overall market, clearly we have a higher low, we have some follow through, and this is where it gets really, really interesting. Whether you're a bull or a bear, you want to pay attention to the major options level. That's how important all this options trading is. The fact that the volume of options is ripping, it has a clear influence on where we do go in a day and where we don't go in a day. And I want to let you know that a break and a hold of 5,800 is legitimately bullish in the options market. That is a huge open interest level. Mark that out. If you need a SPY equivalent, it's going to be around 577-ish, 578-ish. But remember, you should be tracking it on SPX because this is the major product that all these big players are going to be trading. So 5,800, legitimately bullish. On the flip side, a push and a hold below 5,700 is legitimately bearish because we're not out of the woods yet. Yes, we could have a reversal. So the way to approach this is never be married to your prediction. That's poor. Have your bull case, have your bear case, and whichever one is playing out, play that one accordingly. I think there's a lot of people who have this misconception that you have to come up with an idea and just be married to it. Stick to that forever, regardless of new incoming information. I think that's a very poor way to approach the market. I think that's a great way to lose a lot of money in the market. I think what you should do is ask yourself whatever the basic questions of your own trading system are, and then from there say, okay, what would make this bullish? What would make this bearish? Do the work beforehand, so as it's playing out in real time, you know exactly what to do and how to execute it. And on that note, I should let you know for the remainder of the week, but by the way, mattkohrs.locals.com, this is 100% free. This newsletter comes to your email inbox every single weekend. I break down the previous week, what to look forward to in the upcoming week, all of the earnings. Here are all the major macroeconomic events. Tomorrow we have Philadelphia Fin Manufacturing and also consumer confidence. And I just wanted to let you know the seasonality for tomorrow, Tuesday, is slightly bullish. Wednesday is very bullish. I'd be looking for us to be pushing 5,800, 5,850, something like that on SPX. Thursday is also slightly bullish. And then it's when we get to Friday that the seasonality returns to being bearish. That also happens to be when the JP Morgan put side of the collar play is going to be expiring. So pay attention to that, but I'll give you that breakdown as we're a little bit closer to that. So right now, clearly the bulls are regaining control. Have your bull case, have your bear case, and don't let your political biases get in the way of you making easy money. That's what I have for you. I appreciate your time. I appreciate the good vibes. If you have any questions, comments, concerns, let me know in the comment below, and I'll make sure to respond to as many of you as I possibly can. That's what I have for you. I'll catch you in the next one.